What's up, guys? Welcome back to another live stream. Am I live? Let me double check over here. Am I actually live? Let me see. Are we live? Yes, we are. What's up, guys? How are you? Welcome back to another live stream. There you go. How are you guys doing today? Good evening. It's getting chilly. I am in North Carolina, guys, and it's getting chilly, actually. Hi, Lena. What's up? How are you? Investing for. What's up, bro? One Mighty. What's up, Micaela Sanamour? Sanamour. That's a French last name, right? Jairo. What's up, Jairo? How are you? ¿Cómo estás? There you go. One Mighty Hex. James. What's up, guys? Ivan Ponce. What's up, bro? Welcome back. So let's get this live stream started. So, red day across the board, guys. Is the rally dead? Or is this just some sort of pullback inside a very solid rally, which is what we have been seeing since last Thursday? So please drop me a comment down below and let me know what stocks do you guys want me to go over. And in the meantime, I am going to tell you guys about the trading session. Russell 2000 goes down 1.14%. Nasdaq goes down 1.12%. The Dow goes down 0.63%, and the S&P 500 went down 0.89% today, guys. You guys know that tomorrow I want to do a workshop over here on Discord about market mechanics. Today we had the perfect definition of the way that market mechanics work. And why? Well, because if you guys have noticed, I am always in the main chat in Discord. I am always telling you guys about the Dixie and the 10-year Treasury yield, and I am always telling you guys about bonds. So earlier on today, as soon as the trading session opened, we had a situation in which someone was lying. And why? Well, because we had the Dixie, the US dollar, going higher. We also had the 10-year Treasury yield going higher. We had bonds going lower, but the indices were going higher. So someone was lying, guys. For the most part, it is very, but very difficult for the indices and for the markets in general terms to go higher when we have the 10-year Treasury yield, or TNX, which is the ticker symbol of the 10-year Treasury yield, and the Dixie going higher. That's exactly what happened today. So I was telling you guys in the chat, someone is lying. Watch out for bonds. Bonds are dropping. The 10-year Treasury yield is going higher. The Dixie is going higher. So we had some sort of bullish price action until noon. And then you guys saw what happened into the closing bell. We had a very sizable drop, and the S&P 500 closed the trading session in negative territory. So crude oil went lower today. Crude oil is inversely correlated to to the Dixie, the US dollar. Crude oil goes down today 4.24%. Gold went higher, even though we had the Dixie, the US dollar, going higher. The precious metals are inversely correlated to the US dollar. So gold went up today 0.30%, and silver went up 1.86%, and the 10-year Treasury yield went up today 1.36%. So for the most part, and regardless of the fact of this rally being able or not to keep on going higher, today we had the mechanics of the markets deciding upon the final result of the trading session, as I just told you guys. If we take a look at the sectors, red across the board, except for healthcare, which managed to close in the green, slightly green, going up 0.09%. But other than healthcare, the other 10 sectors of the markets went lower today. This is another inverse correlation, guys. The real estate sector is inversely correlated to the 10-year Treasury yield, which went up today 1.36%. So in this case, the algorithms simply sold out of real estate stocks because the 10-year Treasury yield was going higher. Energy almost closed in positive territory. goes down 0.03% only. And when it comes to the most important sectors of the market, technology goes down 0.86%. Financials go down 1.42%. And consumer discretionary, this is a very important sector. Let's say market cap wise, we have Amazon and Tesla inside this sector. Those are the two most important holdings inside consumer discretionary. So this sector went down today 1.59%. If we take a look at the advancers and decliners distribution, we had pretty much the same amount of stocks going higher than lower. So we find 3,478 stocks going lower and 3,335 stocks going higher. So from an advancers and decliners distribution standpoint, tomorrow's trading session could be going either way. Let me see over here. There you go. Tesla. We have a bunch of requests. Absolutely. Let's go over all of those stocks. Isaac Alvarez sold my AMD for a nice profit. I did the same, bro. I did the same. I closed a swing trade on AMD. I closed it pre-market and I ended up making $400. I also closed a LEAPS that I have on NVIDIA. You guys know that NVIDIA is posting earnings on Wednesday. And semiconductor stocks have gone, in my opinion, guys, too far, too fast. So I decided to close those positions. I closed my AMD shares. I had 150 shares at an average cost of $72. I closed that position pre-market and I closed my LEAPS of NVIDIA as soon as the trading session opened. That's what I did today. Hey guys, keep in mind before I start to go over some stocks. So you guys know that the most important factor as of now for the markets is the Federal Reserve. So we had some interesting activity, Federal Reserve wise, between yesterday and today. So yesterday we had Christopher Waller, which happens to be a member of the Fed, saying that the markets overreacted to the CPI data report that we got last Thursday. The markets shook it off because the markets went higher until noon at least, or until 1 or 2 p.m. We also had the New York Fed, or the Federal Reserve of New York, saying that inflation expectations are rising for 1, 3, and 5-year outlooks. So that's obviously bad news for the markets, guys, because you know that the Federal Reserve has stated plenty of times that one of its major priorities is inflation expectations to remain anchored. The markets shook it off. And lastly, we had Lael Brainerd, another very important member of the Federal Reserve, speaking. She was interviewed by Bloomberg, I think, a bit before noon. And she sounded kind of dovish. So that's what really fueled the mini rally that we saw from noon and until 2 p.m. She sounded kind of dovish, saying that the Fed is very likely to slow the pace of the interest rate hikes. However, she also stated that the Fed needs to keep inflation expectations anchored, which is obviously hawkish. And she also said that the Fed is going to have to be restrictive for longer. But the markets only listen to the to what she said about slowing the pace of the hikes. And we saw that mini rally from noon and until 2 p.m. Keep in mind that, and well, you guys know that the markets ended up dumping into the closing bell. Keep in mind that tomorrow we have the producer price index, okay? And that report is very likely to move the markets if the S&P 500, guys, had closed the trading session above 4,000 points, because as of now we have a very clear area of overhead resistance. I would have said that the markets were going to shake it off, or that the markets were very likely to shake off any negative PPI report tomorrow. However, since we had a very, let's say, poor close, in my opinion, take a look at the SPY, and since the bulls have failed on 2 occasions, guys, at 399 points, they haven't been able to close one single trading session above this area. That PPI report is going to be very interesting tomorrow, in my opinion. Let's see what happens. So if the report happens to be negative, maybe that is going to that could be potentially a reason for the markets to drop further. But if the report happens to be positive inflation wise, then we might see the rally resuming. Who knows? what the markets are expecting is an increase month over month of 0.4%. Keep in mind that that report comes out tomorrow at 8:30 a.m. Eastern Standard Time. Keep also in mind that on Friday we have options expiration. So put that down on a sticky note. That is gonna be very important. And we can make the case, guys. Take a look at the 4-hour chart of the SPY. That as of now we have a very important number of market participants with a bunch of gains in their portfolios because we have seen a 15% rally. So weird stuff happens when we have options expiration. Remember that options expire once a month, every third Friday of any given month. So if the rally resumes and if we keep on going higher, then that might be an excuse for market makers in order to trick trap and fool most of the call options holders that we have as of now in the market. So let's see how we get to the trading session of Friday. But if the rally resumes, I would believe that the market makers are going to be tempted in order to dump the markets, in order to have all of the call options that expire on Friday to expire out of the money. So keep that in mind. Let me see over here. What request do I have? Micaela, Google, please. Absolutely. Let's go over Google. Okay, guys. Um, do you have any questions about the SPY? Let me tell you before going over some stocks. In my opinion, I am going to pull up here a 3-year chart. Take a look at this trend line, guys. In the case of the SPY, that comes from all-time high. So the bulls already failed right at this trend line on 1, 2, and 3 occasions. So I'm thinking that maybe a fourth attempt in order to burst above it might be an unsuccessful attempt once again. I am talking about 410 points. So if the rally happens to resume, this might be a very important area of supply rather than demand. So we might see the markets pulling back from this area, 410 points. And if I pull up here, guys, a 4-hour chart, take a look at the 200-day moving average, downward sloping 200-day moving average right at 407 points. So these two areas are going to be very interesting spots in case that the rally resumes. In order to short the markets, put these two numbers on a sticky note: 406 points and or $406 and $411, $410 ish. So that is going to be, from a resistance standpoint, the most important areas that I am going to be keeping a close watch on in case the markets keep on going higher. From a support standpoint, guys, and if tomorrow we happen to see another red day, I might be a buyer of the dip at around $392. $392 is a previous resistance back from late October, and this is also a previous resistance back from late June. So if we happen to see some sort of retracement, and if the bulls happen to outnumber the bears at around $392, this might be an area in which we could be potentially taking a bounce back up trade. And keep in mind that very near or very close to this area, $392, we have the 100-day moving average. This is a very important moving average. So watch out for this area in case of a further retracement in the case of the SPY, $392. There you go. Now let me go over Google. What is going on in the case of Google? It's asking for Google. This is Michael. Absolutely. So Google goes down today 0.72%, closes the trading session at $96.03. So the bulls fell today at 97 bucks. 97 bucks is a previous resistance back from late October, and this is also a previous support back from late September. That, by the way, coincides with this 180 SMA on the 4-hour chart. The RSI is a bit elevated. You guys can see the RSI on the 4-hour chart sitting at 71 points. So if the markets happen to keep on going lower tomorrow, I am going to be keeping a close watch on $92. $92 happens to be a former support back from late October that could be potentially acting as support. And $92 is also very close to this semi-ascending 5-day moving average. So this might be the, let's say, the spread in which Google could be trading in between somewhere between $97 and $92 per share approximately. Let me go ahead and take a look at the market structure of Google, guys. Supply and demand. So what is the market structure of Google? Again, let me see. Oh man, let me see. What is the market structure of Google McGoogle looking like? Let me see. There you go. Let me see over here, guys. So keep in mind and remember, guys, that the blue shaded region is the demand and the purple shaded region is the supply. As of now, we have an ascending supply that is above the demand. So we can make the case that sellers are, from a market structure standpoint, still in control of Google. And keep in mind that we are dealing with, or that Google is dealing with, a major downtrend. We have a downward sloping 200-day moving average, downward sloping 100-day moving average. So any failed attempt in order to take out $97 might be a potential area in order to buy puts, guys. And if the trade happens to be right, we can ride those puts down to this semi-ascending 5-day moving average near 92 or $93 per share. Google is a bit overextended. RSI relative strength index on the 4-hour chart at 71 points. So let's see what happens. Can the bulls take out $97, consolidate slightly above that area and fill the next important gap up to the downward sloping 50-day moving average at around $100? That's possible. But since the stock is a bit overextended, I would be rather a budget of puts at around $97. There you go. So we went over Google, DraftKings, Dominic. What's up, Dominic? How are you? Let me go over DraftKings. What is going on in the case of DraftKings? Let me see. Goes down today 0.94%, closes the trading session at $14.74. And take a look at this 100-day moving average. This is a critical spot for DraftKings, guys. $15. $15 also happens to be a previous support back from mid-March. The RSI is at 63 points on the 4-hour chart, so we can make the case that DraftKings is neither oversold nor overbacked. So watch out for the bulls taking out $15, because in that case we have the next gap up to $16, downward sloping 200-day moving average, and this downward sloping 200-day moving average, guys, has turned into a nightmare for the DraftKings bulls. So check this out, guys. The bulls of DraftKings have failed right at this downward sloping 200-day moving average on 1, 2, 3, and 4 occasions. So we can expect sellers to outnumber buyers if this moving average happens to be tested once again. This could be a momentum trade, guys. We have an ascending 5-day moving average. DraftKings is already above the 50 SMA and the 180 SMA on the 4-hour chart. So watch out tomorrow for DraftKings, because if we happen to see the rally resuming, and if we happen to have a green day tomorrow, and if the bulls take out $15 and good volume and momentum, this could be a 6% trade up to the 200-day moving average. Let me take a look at the market structure of DraftKings. Does it convalidate a push to the upside? Let me see. Not really. Or maybe we can make the case. Take a look, guys. The demand is descending. So we have a descending demand and we have an ascending supply. So we can make the case that if that gap up to the downward sloping 200-day moving average happens to be filled, sellers are going to be outnumbering buyers at around $16 per share. So there you go, Dominic. There you have your breakdown of DraftKings, Amazon, absolutely. Pamela Lewis. Let me go over to Amazon, absolutely, right away. What is going on in the case of Amazon? I didn't follow up on Amazon today, guys. So goes down 2.28%, closes the trading session at $98.49. And again, guys, primary downtrend below all the moving averages, downward sloping 200-day moving average, downward sloping 100-day moving average. So obviously, guys, this is not a good looking chart. If you're going to take a trade on Amazon, you have to be very careful and try to place a very tight stop loss. And the bulls failed today at a very important area of resistance, $102. $102 is a previous support back from late June, also a previous support back from early June, and also a previous support back from May. So I'm thinking that if we happen to see another red day tomorrow, the bulls of Amazon, or rather the bears, could take the stock of this company down to $94, which happens to coincide with a semi-ascending 5-day moving average, and also happens to coincide with this 50 SMA on the 4-hour chart. The RSI is at 62 points, a bit elevated, nothing crazy. And I think that we got, I don't know if that's good news or bad news, guys, but Amazon announced today that they are laying off 10,000 employees, which doesn't happen to be a lot of people for a company such as Amazon. But I don't know. That's a tricky one, guys, because the other day Meta announced that they are going to that they were laying off something like 11,000 people, and Meta, you know, shut up something like 30%. So who knows if the markets maybe tomorrow feel enthusiastic about the fact that Amazon is laying off people, and they award Amazon by taking it higher. Watch out for that, guys, because if Amazon happens to take out $102 and good volume and momentum, we have a gap that could be potentially being filled up to $107. This is a previous support back from mid-July, and this is also a previous resistance back from mid-June. Let me take a look at the supply and demand of amazing Amazon. So let's see, Amazon. So take a look at the market structure sentiment, guys. 1 out of 10, and we have a. This is a collapsing. This is a collapse in demand that is way below the supply. So not a very good looking chart, market structure wise. So yeah, we might see Amazon dropping down to $95. And mind you, guys, if this semi-ascending 5-day moving average happens to be taken out by the bears, we have room down to $88. Previous support back from early November. Not a good looking chart at all in the case of Amazon. I was thinking Amazon would go up to 105, 106. Yeah, that's possible. If the Bulls can take out $101, I do agree with that, Pamela. Sure. That's the next. You're spot on. That's the next cap. Absolutely. I do agree with that. Yeah. They are building a distribution center here in Clarksville, Tennessee. Not sure how that's going to work. Um, yeah, you know that the economy is slowing down, guys. So I think that as time passes by, we're going to see way more companies laying off people. That's bad news for the real economy, and let's face it, that's good news for Wall Street. Obviously, the Fed has said over and over and over and over again that they want to see the unemployment rate ticking higher. So the higher the unemployment rate goes, the closer we are going to be to some potential pivot. So that's good news for Wall Street. So take a look at what happened with Meta. I wouldn't be surprised if the markets award Amazon because of the fact that they are laying off people. So that's pretty much in the cards. Absolutely. Anytime, Dominic. Absolutely. Amazon getting rid of bad apples. Yeah, you can make that case. You can make that case. Okay, bad apple. By the way, guys, I short sold Apple today and I made $180. Let me go over Apple. So yeah, sure, absolutely. Apple. So goes down today 0.96%, and it closed the trading session at $148.28. And mind you, guys, I borrowed shares of Apple once the support of $149 was taken out by the bears. I borrowed 200 shares, but I decided to close the trade. Worked out like perfectly well right away. And I decided to close the trade. I made $180, and that's it. I am out of the trade. So the $149 is a very important spot for Apple. Watch out for for that level tomorrow, guys, because if the bulls fail at bursting above it, then we might have another possible short position over there. $149 is a previous support back from mid September, and this is also a previous support back from mid March. So this is going to be the stock that is this is going to be the stock that is going to be on the very top of my watch list tomorrow. So if I see the bulls having a hard time at 400 at $149, I will be probably uh, borrowing shares once again in order to short Apple. So um if because on top of that, guys, I borrowed the shares a few minutes before the closing bell. But if I am able to open a short on Apple, let's say before noon, then my price target is going to be $144, which is the next important support for Apple. $144 is a previous support back from mid October, and this is also a previous resistance back from late June that happens to coincide with the 180 SMA on the 4-hour chart. So as of now, this is not a good looking short. So Apple has been making some progress because we have a semi-ascending 5-day moving average. Apple is above the 180 SMA on the 4-hour chart. It is also above the 50 SMA on the 4-hour chart. However, we have a clear downward slope into 100-day moving average, and Apple is trading as of now below the 100-day moving average. However, what could be potentially happening with a bullish trade? If the bulls of Apple, on the other hand, happen to be able to take out $149, watch out for a run to the upside, probably up to the 100-day moving average, guys, $152, which is going to be the next important area of resistance once $149 happens to be taken out. So if we can take a momentum trade with Apple from $149 up to the 100-day moving average, we are looking at a 2% profit trade, nothing to sneeze at. RSI at 63 points, so we can make the case that Apple could be going either way tomorrow. Let me take a look at the market structure of Apple. Let me see. No, this is another Apple. What is Apple at? Okay. This is a factor, guys, that I have been telling you that I always consider the market structure of any given stock, supply versus demand. This is very important. Take a look. When it comes to Apple, take a look at the market structure sentiment, 1 out of 10. And we have a collapse in demand and an ascending supply. So that makes me believe that if this area around $149 happens to be tested once again, the bears might be winning the fight, and we might see Apple retracing down to $144, $145, the spot that I just told you guys about. Please don't forget to talk about buying and selling puts and calls. Thank you. Micaela says, yeah. So do you know how to sell options at all, like calls and puts, and you don't know anything about it? Anytime, absolutely, sure, absolutely. Let me see, 200 MA and 100 MA, I believe. There you go. Yeah, in the SPY, that's a very important spot to the upside. Thank you for that explanation on the SPY. Absolutely, absolutely. XLF. I'm asking Micaela. Please don't forget. Just let me know, Micaela, if you have any idea about selling puts or selling calls. Yes. Okay. So I think that you're interested in knowing about selling calls, correct? Let me show you guys some of the trades. I have a trade over here in the case. I have Tesla. So check this out. Let me show you. This is a long-term position for me, guys. So I own 100 shares of Tesla, as you guys can see over here. So I own 300 shares at an average cost of $87.74. I have an unrealized gain of $31,000. However, this is a long-term position, so I am making an extra profit. Let's just put it that way by selling calls, selling covered calls. So when you sell a call, first of all, you need to have the collateral. What's the collateral? 100 shares of any given stock. There is a way of selling calls without having the collateral. That's the name of that trade is the Pullman cover call, but we won't get into that in today's stream, okay? So let me show you some trades that I have closed over here. Let me show you. So check this out, guys. On November 8th, I sold 3 contracts. Remember that you can sell 1 contract per every 100 shares of every 100 shares that you own. So on November 8th, I sold 3 calls of Tesla that expired on January 17th of 2025. I was selling leaps for the most part. So when we talk about leaps, we're talking about call options that expire 1 year out or 2 years out, right? So I sold these 3 covered calls. I was paid $9,960 on November 8th. And take a look at these, guys. The next day, since Tesla dropped, I was able to buy back these same 3 contracts that I sold and that I was paid for $9,960. but I had to pay $9,480. So I ended up making over here something like, how much did I made over here? $400, $500. This was an overnight trade. So when you sell a call, you want the price of the underlying stock that you are using as collateral to drop. So the call that you sell loses value. So you can buy it back at a lower price relative to the price that you were paid. Are you seeing over here, Micaela? At Davora. Did you have a chance to post a link for leap cover call strategy that you mentioned last week? Yeah. So I don't find the video, guys. I'm very sorry. You guys know that I live stream every single day for my Patreon in Spanish. So I have like 1 million live streams because I live stream throughout the whole trading session. So I was looking for the video and unfortunately I couldn't find it. Maybe I need to look, you know, yeah, I need to look further, but I didn't find the video. Micaela, do you have any doubt about selling cover calls? Do you have any specific doubt? If you want to ask me and I can clarify um, any doubt that you could have, can you check on Netflix, please? Absolutely. Yeah, Netflix was a beast today. Sure, an AMD. Yeah. Let me go ahead and take a look at Netflix. Did it burst above $300, guys? I didn't check on that. Let me see. Ooh, take a look. Oh my God. What happened with Netflix? Jesus Christ. I wouldn't chase it here. Sorry, guys. I wouldn't chase it here. Um, Yeah, take a look at these guys. So Netflix absolutely reversed the downtrend because as of now we have the stock of this company trading above the 200-day moving average. We have an ascending, semi-ascending 5-day moving average. It closed the trading session way above VWAP and it went up today 3% and it closed the trading session at $299. This might be a short, guys. I'm thinking. So take a look at this previous area of resistance back from late October, we could even make the case that this is a double tap. So I am seeing over here two possible scenarios tomorrow. So either the bulls cannot hold $307 as support. We're talking about a previous resistance that now is going to act as a new support, and maybe they drop down to a previous resistance at around $280. This is a previous resistance back from mid October, or maybe the bullish scenario. Why not? What happens if the bulls can start to consolidate slightly above a previous area of resistance that now might be acting as a new support? And they fill the next gap up to $326. This is a previous support back from mid March. This is very possible, guys. So they either consolidate and then fill the next gap to 320 bucks, or they fail at holding this previous resistance that now is acting as support and they drop down to $279. This is going to be a very interesting trade tomorrow, guys. And check this out. This previous area of resistance at $280 happens to coincide with the 5-day moving average. Let me take a look at the market structure of Netflix. So, what is the market structure of Netflix looking like? Let me see. Supply versus demand. Yeah, 1 out of 10. I don't think that support is going to hold that new support, guys. We have a descending, I would say, a collapsing demand that is way above an ascending supply. So this might be a short, guys. If $307 um, doesn't hold tomorrow as support. I just did not understand the concept. I think I have an idea of what to do next after watching you right now. Thank you for taking the time to explain it. So, Micaela, do you have 100 shares of any given stock? Let me ask you that. Anytime. So, do you have any 100 share position in your portfolio? Because if that's the case, you can sell a cover call. Okay, I have. I mean, man, let me tell you something. So I have a bunch of golden rules when I sell covered calls. So the most important rule, guys, when you are going to sell a covered call, is always selling that call with a strike price that is above your average cost. That is critical because remember, whenever you sell a call and the call is in the money, you can be exercised. So you can be forced to sell your shares before the expiration date, which rarely ever occurs, but you have to keep that in mind. So I always sell covered calls with a strike price above my average cost. So if I happen to be exercised, I am going to be selling my shares, making a profit, and on top of that, I am going to be obtaining the premium that I was paid by selling that covered call. So that is very, but very important. Michaela, if you want to sell a covered call, please just DM me and let me know what covered call you're interested in selling. Okay. And I can talk you through it. Okay. Absolutely. I can help you with that. Not a problem. Just DM me. Okay. Let me know. Hey, Albert, I have 100 shares of, I don't know, of AMD and I want to sell a covered call. So my average cost is whatever. And I will talk you through it. Okay. Not a problem. This is being recorded. Gonna go back and review this information. Yeah, sure. Absolutely. Yeah. It's gonna be available for you guys. Sure. Sure. So, okay, if those Apple covered calls didn't go your way, would you buy back your covered calls with a 5-10% loss, or would you keep holding? I always hold, Isaac. I always hold my calls. Take a look. Take a look at the covered call that I just told you guys about Tesla. So let me pull up here Tesla. I have an unrealized loss over here that doesn't affect that doesn't affect my portfolio. It doesn't affect neither my portfolio nor my buying power because I own the collateral. So as of now, I have a negative return of $1,620. However, take a look at the strike price, guys, of the calls that I sold, $280. What's my average cost on Tesla? $87. So what happens? Let's say hypothetically that Tesla goes on an absolute tear tomorrow because I don't know, because of whatever. I don't know. Someone buys Twitter to Elon or something like that. Okay. So say that Tesla goes above $280. And whoever I sold these covered calls to happens to exercise those calls before its expiration, which would be absolutely weird, guys. You guys know that before expiration, options have extrinsic value. So an assignment before expiration is something that rarely ever occurs. But let's say that happens. Let's say that I sold these calls to Dumbo, and that person wants to exercise his right or her right to buy shares of Tesla at $280 if the price of Tesla happens to be above $280. If that were the case, guys, I am going to keep my premium, the entire premium that I was paid, and on top of that, I am going to be selling my calls at I'm sorry, I am going to be closing this position with 300 shares with a very nice profit. Figure that. So as of now, I have a profit of $31,000. So what's gonna be my final profit if I happen to be exercised selling my shares at $280? And I am going to be making a phenomenal profit. And on top of that, I am going to be keeping the entire premium that I was paid for selling these cover calls because I sold 3 cover calls. So the main golden rule that you guys need to follow is always selling covered calls with a strike price above your average cost. And as of now, I'm just waiting for Tesla to pull back. I have an unrealized loss over here of $1,620. As I just told you guys, this doesn't affect neither my buying power nor the total value of my portfolio because I own the collateral. And this is some sort of hedge. This is protection in case Tesla happens to drop further. All right. AMD, Real Madrid. There you go. We have a fan of Real Madrid. Okay, AMD. I think that I need to call it a video, guys. I still need to film my video in Spanish. AMD went up today 1.60% closes the trading session at $73.53. It is very overextended, guys. I wouldn't chase it here. If you have profits over here, and take a look at my example, guys. I locked in the profit pre-market today. Pre-market. I was earlier on today. I think that AMD was upgraded. Who upgraded AMD? It was upgraded, guys. I don't remember who upgraded it, but I heard the news. UBS upgraded Advanced Micro Devices to buy from neutral and adjusted the price target to $95 from $75. Whatever, guys. It was upgraded. I didn't give a beep, and I decided to close the trade, guys. Take a look. AMD has gone up 28% in a matter of a few trading sessions. So if you have a profit over here, my advice would be locking in the profit. So let's say that AMD keeps on going higher. So if that were the case, watch out for a process of consolidation slightly above $72. This is a previous support back from late June. So if the bulls happen to hold this very important area at around $72, that might be a sign that they are gathering momentum in order to make a push higher and maybe fill the next important gap. And this is a very important gap up to this downward sloping 100-day moving average at around $77. If we're able to take this trade from $72 up to $77, you're looking at a 6% profit trade, nothing to sneeze at. However, if AMD takes out these $72, this support, we have room down to $68. Previous resistance back from early October. Take a look at the RSI on the 4-hour chart, 75 points, very overextended. So let me reconcile the technical chart with the market structure of advanced micro devices. Let me see. So what's the market structure looking like? And yeah, we have a very solid market structure over here, guys. 7 out of 10. The market sentiment, structure wise, and we have a rise in demand and also a rise in supply. So yeah, AMD looks pretty well from a market structure standpoint, but I think that we are about to see buyers exhaustion, sorry guys, over here. And I think that AMD is due for some sort of pullback, or maybe if it fills a gap to this downward sloping 100-day moving average near $77, this might be a short over here. Guy Dewey says, I got assigned Meta 3 weeks at strike 115. Thinking of selling a call at 120 for this Friday and get rid of it. What's your thought? I know many hate Meta right now. So you got assigned 100 shares, I guess, at 115. Yeah, let me take a look at Meta quickly. Yeah, you're gonna be selling. Yeah, if I mean if you don't want to hold the shares, this is another stock that is overextended. Meta could be potentially consolidating slightly above $114, in which case it could be potentially filling the next gap up to $122. This is a previous support back from mid-October. So if you don't mind being assigned, bro, yeah, that would be a win-win. Sure. So you were assigned, so I guess that you sold a put, correct? Yeah. So I guess that you were assigned 100 shares of Meta because you sold a put with a strike of $115. So if Meta goes up to $122, you are going to be getting rid of those shares, making a profit after having made a profit by selling a put. This is a win-win, bro. You have nothing to lose. You made a profit selling the put. You were assigned 100 shares. Perfect. So now you're going to be receiving a premium by selling a call. And if you happen to be assigned, you are going to be selling your shares at a profit and at the same time keeping the premium that you're going to be paid by selling a call. That's a win-win, bro. Absolutely. Go for it. Yeah, that's a win-win. Absolutely. Yeah. Assignments happen more often on next event and day. That's true. Absolutely. So if you sell a call and the call is in the money, and the stock of that company is about to pay a dividend, you're very likely to be assigned. Absolutely. Yeah, that's a win-win, bro. Absolutely. Sure, sure. Go for it. His expiration date is so far out, he can hold for a correction. Absolutely. Yeah. So, Snowflake, guys, and that's it. That's it because I still need to film a video in Spanish. I think that tomorrow, guys, I am going live with Mario. We want to do a workshop about market mechanics. Snowflake goes down today 0.98%, closes the trading session at $157.88. And we have a very tough spot over here for the bulls, guys. 100-day moving average, $164. RSI is sitting at 69 points on the 4-hour chart. So keep a close watch on the markets in general terms, guys. So if the rally resumes, we could see why not the Snowflake taking out this 100-day moving average and maybe filling The next important gap, very important gap, guys, up to this downward sloping 200-day moving average at around $180. This is also a previous area of resistance back from mid-August. If we are able, and this is a very volatile stock that when trades on good volume and momentum can go higher in a very aggressive way. So if we can take a momentum trade over here with a snow bursting above this 100-day moving average, so from $163 up to the downward sloping 200-day moving average around $180, this would be a 10% profit trade, guys. Phenomenal trade, no doubt about it. Aside at 69 points, a bit elevated, but take a look at the RSI over here, guys. When snow trades on good volume and momentum, this stock can go on a tear. Bananas. So this could be a momentum trade if the markets happen to resume the rally tomorrow. And well, guys, I am going to wrap it up. I still need to work a lot over here. Thank you very much for joining me. Remember, I am live streaming for you on Mondays and Thursdays. However, if Mario happens to be available tomorrow, I am going to be doing a workshop about market mechanics after the market closes. So thank you very much, guys. I really enjoy live streaming for you. So take care and see you guys tomorrow after market close. Take care, guys. Wow, 46 minutes in. That's it. I gotta go. Bye bye.